Let's clear the air of what actually affects mortgage rates. On the last announcement, rates were cut by 0.25%, and somehow mortgage rates went up. Confused? You're not alone, but there's actually a reason. The Fed doesn't set mortgage rates. Their rate only affects short-term borrowing between banks. Mortgage rates follow the bond market, which reacts to what investors expect the Fed will do, not what it just did. So when the last announcement was made, the market had already adjusted weeks ago. Then Jerome Powell spoke, sounded a little cautious, and investors thought maybe the economy is stronger than we thought, and it resulted in rates going up. It's all about the mood. The market moves on feelings, headlines, and tone, and not on logic and math, unfortunately. Mortgage rates are basically reading the room 24/7. One bad gesture from Powell, and that can send rates up. The next Fed meeting's October 28 and 29, and the PCE inflation report drops October 31st. Powell talks Monday, inflation talks Thursday, and your mortgage rate, we'll see who wins the argument by Friday. So if you haven't locked in your rate, make sure to ask your lender to do so unless you want the gambler's high and you're willing to see if you hit the jackpot.